Hi all, welcome to First Post Pre-Budget Facebook Live. This is a series of discussions we hold with various experts in various sectors and areas to understand what are the expectations from the budget, what are the concerns of each sector. Today I have with me Somasundaram PR of World Gold Council India. Let's discuss about what are the issues with the bullion sector in India, and especially in the backdrop of the demonetization that has happened in November. There has been a lot of reports saying how it has actually impacted, negatively impacted the sector because of the cash crunch, a lot of job losses, and many other reports have been there, and sales are also down. Tell me, Mr. Somasundaram, how is this, how has been the situation? How has it improved in the last few days since the cash has come back a little bit, and a little bit of liquidity has been eased? So what is the situation now?
Yeah, yes, demonetization is an economy-wide action. It's not specific to any industry. We have seen that most industries have reported a temporary disruption, which is to be expected when you take an action of this magnitude. Certainly gold industry was also affected, and initially people were busy exchanging the cash and they didn't know. We also heard stories about how some parts of the trade were exchanging gold for cash at prices which are exorbitant, and we have read about news items which speak about the taxman going after some jewelers who have done this kind of trades.
Yeah.
So, but overall, for a buyer, for an average buyer, post Diwali, there has been some temporary disruption, particularly a product like gold, which is 60% of it comes from the rural areas. So the cash did affect. But to say that it was completely, it's a long-term issue would be probably not correct, because one of the things that this study that we have done today throws up is that gold demand is more closely linked to income than to price and other factors. In fact, income comes right on top in our econometric analysis when it comes to the correlation with gold demand. 1% increase in income leads to a 1% increase in demand over the long term, whereas a 1% increase in price leads to a 0.5% decrease in demand. Okay, in the long term. In the short term, a 1% increase in inflation leads to a 2.6% increase in demand. So we have analyzed these factors, taken out different strands, and done some analysis, and give some directional, thoughts on how demand behaves in India. So if you really look at it, what is important post demonetization is not exactly what happens to the cash or what happens to duty. It's important, no doubt, but in the long term, what happens to incomes of people?
So income also is getting impacted, right? When the jobs are getting cut, and there is a slowdown in the rural area, especially rural area. There is a slowdown. So income is also definitely getting affected, right?
Yes, that is a short-term phenomenon. There is no doubt. But what we need to see, which I doubt if any of us can answer in the very short run, and if you read the statements of very large corporates and CEOs and market analysts, everybody says here the temporary disruption will be soon replaced by a huge sense of optimism as the trade practices stabilize and they move towards what the government wants in terms of digitization, and a lot more cash is coming. So all these factors put together, we should see a lot of change, a lot of optimism. It will lead to a lot of behavioral change, no doubt. It will also lead to a lot of optimism. Because let's not forget, a demand like gold doesn't disappear. It just gets added as a latent demand. Because if you miss a meal, you missed a meal. But if you don't buy gold today, you will think about it and buy it a week later. So to that extent, what we see is, what does demonetization do? to incomes. Okay? And as we see, we are on the side of experts who say that long term this will lead to a more qualitatively better economic income, an economy, and it will also lead to a lot of optimism. It will allow people to focus on innovation, productivity across things rather than on trade related arbitrages with bill, without bill, with PAN card, without PAN card, etc. So if you take that view, certainly gold will be a big beneficiary.
Okay, so how is this transition going to be? Is this going to be really painful? Because it is a huge shift for gold, as you said. It is from cash to going cashless, and getting in the ambit of tax, and all those issues are there. We can't just say so it is there. So how is this transition going to be? How is it happening now?
You see, this is where we have brought out this report with some data, and of course there are a few more questions which can be raised. We have to first of all understand, yes, people have been buying with cash, but not that all those who bought with cash were actually buying it unaccounted cash. There were probably, elements on the fringes, but if 60% comes from rural areas, a large part of rural income, I'm not saying all rural income, large part of rural income under the policy is exempt in any case.
Okay.
So when people buy, they were always buying with tax-free income. Let's put it like that. I'm giving you a broader picture.
It was not unaccounted.
It was not unaccounted.
Okay.
And it is another thing that if you go and ask somebody how much gold do you have, they will never tell you. No, that has got lots of traditional things. You don't want evil eye. Various cultural and economic things. I didn't want somebody to know how much wealth I hold because I lead a different way. The life is held here when it comes to assets and disclosures, etc. That doesn't make it unaccounted wealth. But the fear is always there that if I say I am holding, let us take 500 grams of gold, will there be other issues for me in the society, whatever it is. So, it is not, we have to therefore distinguish between people's behavior out of a sense of tradition, old fear, anxiety, and one which stems from a need to avoid tax. It was not this. I think overwhelming focus is when people say, if you ask me how much assets you have, I wouldn't want to say it unless I have to. That doesn't mean all of it is unaccounted. It could all be, everybody has accounted wealth. But even they don't want to give it to the tax this thing, because it is a way of an approach to confidentiality in the society. Gold is part of that sentiment, that part of that thinking. Therefore, when you say that how will the digitization change gold, I think it requires them to say that, look, you are exempt. You have tax-free income. It's much better you buy it with the digital modes rather than do it, because there are benefits. Let's not forget, even when they bought with cash. Let us assume somebody bought without bill. Do we really believe that the person who took all the risk of getting, let's take gold from the grey market or selling it without taxes, he took all that risk to pass on the benefit to the consumer or to line up his own pockets? Anybody would say, no, it is to line up their own pockets, which means the consumer never benefited from these practices, although ostensibly they got it without bill, therefore they saved on VAT, but then they didn't know what the purity was. They didn't know what the price was, because there is no price. You could use any price in India in a particular range. Now, all this hopefully should disappear when you buy it in the digital mode, let's say. So the benefits of a transparent price, better purity, will far outweigh the perceived benefits of buying without a bill in cash. Now, will this happen overnight? No, but will it happen in the next few quarters as things change even in the broader economy? Things which are otherwise bought for cash is going to be bought digitally, and therefore gold also will obviously benefit from the trend. You will see a big change. I always point to people who ask me this question, whether gold will change, industry will change, to the old things. If you recall, how did dematerialization start in India? if you really see, there were lots of questions. Same thing, there were a lot of Binami shares, who will put it in dematerialization, because it was a big change. But it took some time for people to accept it. But once the banks started selling demat accounts in 2000, early 2000, economy did well, and people, tax rates came down, and there were lots of benefits given for equity markets. A lot of things came together. Today, India is probably one of the economies which has the maximum dematerialized thing. I mean, 99.99% NSDL and CDSL have done this. So, would you have believed this in 1998?
But actually, digitization has a larger base, and it is also a generational shift that usually happens when it comes to cashless economy. That also.
No, but I am only saying any change is always debated with our available knowledge.
Yeah.
That is what I'm trying to say.
Yeah,
and
yeah.
Available knowledge always says, yes, I know all these changes happened in my lifetime, so this change cannot happen. If somebody had told people in India in 1995, you can walk in and get a telephone connection, without going through this enormous process. You can buy two-wheelers, night, day, evening, whatever time. It would have been difficult with the information available then and your expectations to say that this will happen in India, but these are happened.
Yeah.
So, change, and particularly that is what I come back to my first point, change of this magnitude should not be analyzed in a unidimensional way. How will it affect gold? I don't know how it will affect gold in a sense, because you don't know how it is going to affect our behavior.
Correct.
So this is a change which is more where it is more behavioral than transactional. So arising out of the behavior, transactions will change. I am very optimistic, and I am on the side of optimists who say that this will drive better things. Let's not forget, one of the things is this will hopefully increase the tax base. So that way public finances will strengthen, which means the government can afford to take a far more benign stance towards gold, taxes, etc. So it will create a very good cycle, because taxes are lower, people are happy to buy, and because people are happy to buy with taxes get lower. So we should look at the positive side as well.
Okay. So what are your expectations from the budget? What are your what are your proposals? What are your recommendations for the finance minister?
Right. As I said, we have always said that anything about gold need not necessarily be in the budget, because in budget you normally deal with duties. Yes, in 2015, 3 major schemes were announced, which was the Indian gold coin, first ever coin, the gold monetization scheme, and the sovereign gold bond. So there is always an expectation every year will something happen on gold. But more than the budget, we have the GST, which is again a follow-up of the transparency measures, because GST is less about taxes than about transparency, put it like that. So how is this going to fit into the GST regime is important. So if you were to ask what would you look at in this thing, going again by the econometric analysis that we did, what does it say? Improvement in income leads to a better impact on gold. 1% increase in income is 1% increase in demand. All other factors have less impact. Given that, what would we like to see is how is income going to go up? In the last budget, for instance, the government said that the rural income will be doubled by 2020.
Yeah.
Now, is it related to gold? Directly no, but indirectly yes. 60% of gold demand comes from rural areas. So any improvement in the rural economy is going to increase the savings, and any part of savings, anything about savings, part of it goes into gold. Gold is the second to fixed deposits when it comes to bank deposits, when it comes to preference. So will it benefit gold? Yes, it would. So if you were to ask me, yes, one is the duty has to come down, but whether they do it in the budget or along with GST has to be seen. Because when we say duty, it is not just customs duty. We have to look at what gold is today. 10% plus 1% excise duty plus 1.5% VAT, roughly. So one on top of the other, let's say it comes closer to 13%. Right? Now 13% for an asset class is certainly very stiff. And we have seen it spawn smuggling and other stuff. So in the drive towards transparency, certainly we have to now you have to focus more on people buying gold through the organized system, through in a transparent way, rather than going back to the old ways of buying with cash, etc. So it makes more sense now to cut duty and benefit from the general awareness of transparency, etc. So our point is duty overall has to come down. It's not just customs duty alone. Customs plus excise on gold must be significantly lower. There's also another logic to it. You see, when we allowed cash transactions in 2002 to 2000, when GDP was growing, we never had issues of demonetization. At that time, the duty was kept at 2%. Now we are saying on the cash, we have taken a very, very big step. So we are now pushing for transparency through the cash. Should we not push for transparency on gold as well? Which means demonetization must be followed by a more very, very low tax rates on gold, so that people move really to take advantage of the transparency system.
What is the rate? Do you have a rate in mind?
No, we don't recommend that. But this thing will be, let's look at what it was in 2011 and 12. For 10 years, it was 2% plus 1 to 1.5% VAT. So it was about 3%. Let's keep it as 3 to 3.5. Today it is close to 13. So this is the range. You have already given them, when you allowed them to use cash, which you see as a bigger danger today. When they were using cash, you taxed gold at 3%. When you have tackled cash, you are charging gold at 13%. Now that's really in conflict. So this is the range. Our point is it should be closer to this end rather than this end.
Okay.
So I will leave it at that. I am not suggesting a rate, but it should also make sense for the government.
Can the government just cut it sharply and bring it there, or should that be a gradual?
The government, raised it. Although it was supposedly gradual, it was every couple of months.
That's true.
I mean, these are decisions which can be taken. But as I said, whether it is taken along with GST introduction or in the budget, we can't say. The government will have different compulsions to do certain things. But overall, I think it should be closer to a low rates that we were used to. In the current environment, we are telling people that transparency is more important for the economy.
Okay. So along with that, the problem is there is going to be a surge in imports if that happens. If it suddenly comes down to that level, don't you think there will be an increase in imports?
I doubt that there will be a surge in imports, because import is also a function, one, of our savings. Second, certainly it is also a function of how the international prices operate. International prices have been going up.
Correct.
Okay, and again, coming back to this analysis, it says 1% increase in price leads to a 0.5% drop in demand. So price to demand is not that stronger as income to demand.
Okay.
So if any case Indians are going to get richer, and if the middle class is going to go up, as the NCER and others say, from 250 million to 500 million by 2020, which means you will have more people buying gold in any case. Indians, 45% of India is very young. It is below the age of 25. Right now, which means weddings drive gold demand quite a lot, and with so many people below the age of 25, we are going to see more weddings, which means more gold buying occasions. So these are more important factors on gold demand in the long term than just a duty cut.
Okay.
It's not that people are going to rush because you're going to.
There'll be a certain that bunched up demand kind of thing coming in.
You see, even if it comes up, let's put it like that, it is going to be through the organized system. Okay, which is in a sense good. Okay, you will at least know how people are actually channelizing their savings. Okay, which is far more important now, because then you can bring gold based products through the banking system, etc. But as I said, whether they do it sharply, whether they do it in phases, etc., you have to get gold into the financial system, into the mainstream, make people buy gold through banks, sell gold to banks, and we have to have some policy changes. All this cannot happen in a system where part of it is still people try to avoid the high taxes. It cannot. And the benefits of everybody operating through the organized system is far greater than a slightly higher tax, which leads to all these irregular practices.
Okay. Okay. So in this report that I haven't gone through it in full. So is there any change that you have noticed in the consumption pattern in India towards investment more than what is there any slight change, or how is it?
No, over a period we have seen that there has been big changes. If I may quote a few changes, one is coin demand. Bars and coins actually is more an urban phenomenon rather than rural. In rural India, 88% of the people buy plain jewelry, because they use that as an investment tool rather than bars and coins. Whereas in the urban areas, people do prefer more explicit forms like bars and coins when it comes to investment gold. But even bars and coins which were below 100 tons in 2005 now is closer to 200 tons. We did touch 300 tons in 2013, but average demand is about 200 tons. We believe that this will go up to 250 to 300 tons as people get a little more, aware of conversion charges and bank interest rate, GMS. This has all created awareness about how you can make some more income instead of keeping gold in the locker. So all these will set a thinking, and therefore we believe that demand will go up. The second, we have also seen, if you give 50,000 to a millennial now, 33% say they will buy gold, but when you give the same money to people about 34, 35, 42% and above say that they will buy gold. So because these people have better, probably they want to buy a mobile or whatever it is. So this change does not mean they are moving away from gold. What it says is that in the priorities, certainly electronics and others and luxury products do take a larger mind share. Okay, so this is something which we have seen, but we still feel that the gold culture is very strong even amongst the millennials. But it's not. It is certainly higher as you get into the middle age and other stuff. The other big change that we have seen over the years is that people are really looking. Certainly, parts. If you ask them, they have many of them have even said that they don't know what the heritage is when it comes to recycling. They don't understand. They just buy gold and buy sell, particularly in the rural areas, etc. So probably the awareness increased dramatically, but the awareness has to be given, which means gold has been bought and sold in a manner that it is not all aspects of it have not probably been mentioned to them. So they thought probably without a bill, saving 1.5% was far more important than having a purity certificate. Maybe those are things which will change as we go along. And quite a few other changes, as we said, urban areas moving towards, as you go up in the income levels, you move towards studded jewelry and things like that, which are more intuitive. Those are also here that we could perceive it very clearly.
Okay, so along with this duty cut, whenever it happens, do you think more financial products linked to gold should be there? Do you have any proposal or any new recommendation on that? What all kinds of products can be of use?
Yes, see, even in the KUB Rao report of RBI when they did the study in 2013, based on various discussions, including ourselves, they have put out a lot of products, gold savings products. If you look at China, for instance, a gold savings product through the banking system is one of the most hot products for gold. That is, you go and save a certain amount of money in gold every month, and the bank gives you gold. It's the gold saving schemes which we have. Now, India is very ripe for that now, because we do this through the jewelry channel. Of course, there were some changes in law which said you can't pay more than 12%, etc. So it did cause some disruption a year ago. But that is a product which can come through the banking system, because now that people have opened bank accounts, they have also got used to entering a bank in exchanging currency. The fear of bank and entering a bank must be much, much lesser now. That's also one of the intangible benefits of this whole exercise. So we should probably allow them to save gold through the banking system. It's another variant to the monetization scheme. Instead of saying that please bring your jewelry to the bank, before buying a jewelry, why don't you buy it through the banking system so that the bank holds on to the gold and for 3 years or whatever, and you continue to save. Similarly, people look at gold as an insurance, right? Everywhere says that I must have at least 200 grams for this. We want to sell more financial insurance to the people. Now, is there a way by which you can capture this insurance premiums but actually give them an insurance cover in gold terms? Okay, which is another form of gold savings.
Correct.
But when I look at it, I probably will get 50 grams if something happens to me. But it's a life insurance on which I pay the premium every month or every year, just like any other insurance product, but it is designated in gold. Now, what this does is it just allows us to benefit from the gold culture, at the same time captures savings which are otherwise going through so-called unorganized sector, etc., into the mainstream banking system.
Okay.
So there are lots of products like that we could bring. We could look at Turkey, we could look at China, we could look at what is happening. We should definitely make sure that the Indian gold coin in smaller grammage, etc., is available, accessible across, because that is far more easily recyclable. Because once you have an Indian gold coin, and as long as it is stamp approved and you are not removed it, you should be able to buy and sell it anytime, anywhere. So you almost create a very good recycling system. So I can gift it to somebody who in turn can gift it to somebody, and he doesn't want it, he can put it in a bank. So this should also be created. Instead of putting gold jewelry into a hundi, you could actually drop gold coins into the hundi, make them, change the behavior. That way, it will just come like any other 500 rupee, 2000 rupee notes. A Indian gold coin into the hundi just comes back into the banking system. The temple will not have a problem in parting with it because you don't have to melt it. We will let it create that ecosystem for gold recycling as well, which using gold products, which will also help us.
Have you made any of these proposals to the government?
Well, we keep chatting about it through various things, and I think in some of the papers we have given. And anyway, the government has now seriously thinking on various aspects of gold. But certainly, there is a time for everything, as you know. Everybody has made these ideas. We have definitely made it. If you see even KEB Rao report, some parts of this have been touched upon, but we believe that bringing good, very, very innovative gold-based financial products through the banking system is a very good way to make sure that gold is not just lying in the lockers. It is used for the economy, because a bank holding the gold on your behalf can use that gold. Okay. At the same time, you own the gold. So just like how our savings money is used by the bank. So this has to happen in this country because it has got such a rich culture. It took 60 years, 70 years for us to launch, after independence, to launch the Indian gold coin.
Yeah.
Right? Biggest gold culture. So, but there is a time for it. So similarly, these products have to now come in.
Okay, so I don't know whether you will, but any investment, what is the investment prospects for gold?
we don't give investment advice, as you know,
Okay.
but we always say, which is also one of the things we have put it out, any portfolio with, depending on your risk appetite, debt, etc., any portfolio with gold operates over a long period of time is far better de-risked and always gives you a better return over a long period of time. 15 to 20% of gold in any portfolio. Some people will have less, some people will have more, depending on your investment advisor, but part of the portfolio has to be in gold for us to be able to get the best returns. That has come out in all the empirical studies.
Okay. On that note, thanks a lot for watching. We have more Facebook lives lined up, and to sum up this particular discussion, there is definitely going to be. The government will have to cut the duty to go along with the GST and the transparency. The push for transparency. But along with that, government also has to look at financial products linked to gold. Otherwise, there is likely to be a demand for physical gold going up again. So, on that note, let's conclude this discussion. Thank you for watching. Keep watching this space for more Facebook Lives. Thank you.